Bitcoin's exploding, but here's the real question. How much higher can it go? And how will you know when it's time to stop buying? Because history's clear. Every bull run ends the same way. Maximum euphoria, insane price targets, and then the rug gets pulled. And if you're not paying attention, you're going to be the exit liquidity.
In today's breakdown, we've got a crucial update from Mark Moss, a widely respected entrepreneur in the tech and cryptocurrency space, who just revealed groundbreaking indicators for the Bitcoin market. In a must-watch video, he broke down the 5 most crucial on-chain metrics that can accurately signal when Bitcoin is approaching a market top, giving traders a powerful edge in timing their moves. If you're serious about staying ahead of the curve, you won't want to miss this. Make sure to subscribe to the channel so you never miss an update, and if you find value in this, tap that like button. It helps more people get this crucial info. Now, let's get into it.
So this is probably the most reliable indicator in Bitcoin's history. We call it the MV-RV Z-score. Now, if you could only watch one metric to identify when Bitcoin is overheated or if it's undervalued, this would probably be one of the ones at the top of the list. All right. The MV-RV Z-score, it looks at Bitcoin's fair value versus the market price. So it helps us separate the hype from reality. It does this by using 3 key metrics. The first one is market value, and this is the black line on the chart. And this is just Bitcoin's total market cap. This is the current price multiplied by the total supply. All right. The second one, the blue line, is the realized value. So instead of looking at the price today, realized value calculates the average price of every Bitcoin at the last time it moved on the blockchain. Now, this smooths out the short-term hype, and it shows us where Bitcoin's long-term fair value is. And then finally, the orange line is the Z-score. And this is where the magic happens, right? The Z-score measures how extreme the gap is between the market value and the realized value. It helps us identify the tops and the bottoms with incredible accuracy. So here's why this indicator is so powerful. Historically, every time the Z-score, the orange line, every time it enters the red zone, Bitcoin's in a mania phase and it's close to topping out. And every time it drops into the green zone, Bitcoin's at a massive discount. And here's the crazy part. It's predicted every single major Bitcoin top within about 2 weeks before the peak. I mean, that's a pretty good track record. It's one worth paying attention to. So let's move on to indicator number 2, which is net unrealized profit loss, or NUPL. Now, if you want to know how Bitcoin investors really feel about the market, forget the headlines. All right, this chart tells you everything you need to know. It tracks raw investor sentiment, and it's based on how much profit or loss Bitcoin holders are sitting on at any given moment. And here's the best part. It's nailed the absolute peaks of Bitcoin's biggest bull runs every single cycle. Okay, so how does it work? Well, the NUPL stands for net unrealized profit loss. So it's a way of measuring how much paper profit or losses the investors are sitting on compared to Bitcoin's total market cap. So essentially, are people holding massive gains or are they underwater? And it's calculated using 2 key values. There's the market value, that's the black line on the chart, and this is Bitcoin's total market cap. It's the current price times the total supply. And then the realized value. So instead of today's price, it's the realized value tracks the price of each Bitcoin at the last time it was moved. Now, this tells us what investors actually paid for their Bitcoin. Now, when we subtract the realized value from the market value, we get the unrealized profit or loss, which is basically how much money Bitcoin holders would make or lose if they sold everything today. So how do we use the NUPL to identify market tops and bottoms? Well, the real magic of this indicator is that it maps out investors' psychology throughout an entire market cycle. And that's where these color-coded zones come in. The green zone shows capitulation if it's below 0%. This is where Bitcoin is deeply undervalued. Now, most investors are holding losses at this point. Fear is at its peak, and historically, buying here has produced the highest returns. Buy when others are fearful. The yellow, the orange zones, is like hope or better. It's usually 25 to 50%. And this is the transition phase. This is where investors are moving from fear and starting to go into optimism. And this is often when we see the early stages of the bull market starting to form. Now, the red zone is euphoria. That's greed. It's about 75%, and this is the danger zone. When NUPL enters this red band, it means most Bitcoin holders are sitting on massive unrealized gains, and when everyone is in profit, who's left to buy, right? So we want to buy when others are fearful, and we want to sell when others are greedy. So where are we today? Well, right now, NUPL is rising, but it's still below the critical red zone. So this suggests that Bitcoin has some momentum. We're on the upward trend, but we're not anywhere near a full-blown euphoria just yet. However, the moment we start creeping into that red zone is when we start to get a little bit cautious, because every single time it signaled a major market peak. Indicator number 3 is the Pi cycle top indicator. You've probably heard about this one. It's one of the more famous ones. And here's the thing. What if I told you there's a simple moving average trick that's predicted Bitcoin's biggest market tops within just a couple of days? Well, sounds too good to be true, right? But that's exactly what the Pi cycle top indicator has done over 3 straight Bitcoin bull runs. And the way it works, it's super simple, right? It's almost feels like a cheat code. And here's how the Pi cycle works. The indicator is based on 2 key moving averages: the 111-day moving average, which is the orange line on the chart, and this follows Bitcoin's short-term price trend. When Bitcoin's price is skyrocketing, this line moves up quickly. And then there's the 350-day moving average times 2. That's the green line. Now, instead of just the regular 350-day moving average, this takes that value and doubles it. It smooths out longer-term trends and gives us a clear benchmark for when Bitcoin is running too hot. Now, the key signal is when these 2 lines cross. So here's the crazy part. Every time the 111 DMA, the orange line, crosses above the 350 DMA times 2, the green, it's lined up with Bitcoin's cycle top almost perfectly. In all 3 major cycles, the Pi cycle top indicator flashed within just a few days of Bitcoin's all-time high. I mean, that's a pretty insane track record, especially for a tool that doesn't really rely on any sentiment. It doesn't rely on any on-chain data, macro trends, just simple price action. All right, so let's dig into this Puel method indicator. And basically, it tracks miner revenue relative to historical norms. And like I said, it's been one of the best metrics for spotting when Bitcoin is overbought or underpriced. So here's exactly how it works. The Puel method measures how much Bitcoin miners are earning today compared to the average earnings over the past year. And it's calculated like this. Daily issuance value, which is the newly mined Bitcoin in US dollar terms. Every day, new Bitcoin is mined, and it enters the market. So the metric looks at how much that new supply is worth in dollar terms. 365-day moving average of the issuance value. So instead of just looking at today's miner revenue, we compare it to the last year's averages. And so this helps smooth out the short-term fluctuations, and it gives us a much clearer picture of whether miners' revenue are unusually high or low. And then we divide it, the daily issuance value, by the 365-day average. We get the Puel multiple. And this simple ratio tells us when Bitcoin might be overheating or if it's undervalued. Now, the best part, this indicator has nailed every major Bitcoin cycle top and bottom by showing when miner revenue is too extreme relative to history. The red zone is the market peaks. That's the warning zone. When the Puel multiple enters the red zone, it means miner revenues are at abnormally high levels. Now, historically, this has coincided with Bitcoin's major bull market peaks. So here's how the Bitcoin rainbow chart works. Unlike most technical indicators, this chart doesn't use moving averages, doesn't use market sentiment. Instead, it's based on a logarithmic regression model, which smooths out Bitcoin's price history and it projects potential future valuation bands. So every color in the rainbow band represents a different phase of the market, ranging from deep value to outright mania. Blue and green zones, those are strong accumulation periods. When Bitcoin's price is in the blue or the green bands, history shows these are prime accumulation zones. This is when the market sentiment is at its worst, but that's when the smart money comes in. Yellow and orange zones, that's like mid-cycle growth. That's a holding phase. This is where the transition zone happens and Bitcoin starts to gain momentum. And we move into the yellow and the orange bands where long-term holders typically sit tight and they ride the trend. The red zone is maximum bubble territory, and this is where things start getting interesting. When Bitcoin enters the red zone, the chart is essentially screaming, take profits for some. Historically, every single Bitcoin cycle peak has occurred when we reached or exceeded this band. So is the Bitcoin rainbow chart accurate? Well, let's be real. Like I said, this is a meme chart. But it's remained remarkably consistent across multiple Bitcoin cycles. And for now, it remains a simple visual way to gauge where we are in the market cycle. Well, right now, it shows that Bitcoin is sitting in the upper middle bands, which suggests that we're in a strong bull market, but nowhere near full-blown euphoria. No single indicator is perfect on its own, right? If we just relied on one, we'd either be selling too early or we'd be holding way too long. But when multiple indicators start flashing warning signals at the same time, that's when we have the best shot at making the right decision. So here's what I personally do. If these indicators are in normal ranges, I stay in heavy accumulation mode, aggressively adding and buying on any dips. If we start seeing one or two indicators heating up, I take note. I don't panic. I start looking at all the other indicators because market tops take a long time to form. But I look at the other indicators and see what colors they're at if they're flashing red. I may start to slow down some of my buys, but I don't sell because Bitcoin is a long-term game for me.
You just got Mark's analysis, revealing 5 powerful Bitcoin indicators. His expert perspective is vital for navigating this rapidly evolving market, helping you stay ahead of the curve and make smarter financial choices as we near the cycle peak. Thanks for watching our latest market update. We truly appreciate your time and support. If you got value from this, don't forget to subscribe to the channel. It really helps the page grow. Drop a comment below with your thoughts or questions. And if you haven't yet, hit the like button and turn on notifications so you never miss a crucial update. Big things are coming, stay tuned, and I'll see you in the next one.